Staying with coronavirus, our next guest thinks that the markets will find a bottom very soon and that the longer-term market cycles could still be on track to push the S&P 500 higher. Dan Wantrobski is technical strategist and associate director of research at Janney Montgomery Scott. He's joining us now with more. Dan, so when you look at the action that we have seen over the past week, particularly if you're looking at the charts, is there anything in there to reassure you? Because it certainly hasn't felt very reassuring, particularly even on days when we've seen the VIX come down, hasn't come down that much.
Yeah, no, it's a good question, and certainly given all the uncertainty that's surrounding us from a news flow perspective, not a lot of reinsurance. But what was interesting with the market action last week, you had basically 4 panic days out of 5 in a single week. We call them 90% downside days. It's when more than 90% of stocks and sectors are involved in the bloodbath. The volume is all selling volume. Volume is elevated. And what it does is it suggests panic or approaching some form of capitulation. And so I think that's a little bit of reinsurance because, at any major market bottom that we've looked at in the past, even going back to the 08-09 crisis, even back to the 2002-2003 bear market bottom, you see multiple panic days like we saw last week. It's a good way to kind of flush out the system and reprice the markets. It doesn't suggest that the lows we hit last week were the lows in the final bottom, but it does mean the markets are probing to find those lows. And I believe based on our technical dashboard that we're watching, we're getting close. That's not to say it would happen today or tomorrow, but I do believe within a couple weeks, the U.S. market should find their bottom here.
So let me ask you this. You say that energy should recover in the weeks ahead. Help us understand what you're specifically talking about. For instance, ExxonMobil, that stock is down. Dividend, though, is at 7%. Are you talking more about like a Halliburton or a Schlumberger?
Well, we're talking about the sector in general will be skewed more towards large cap. The reason we're looking at recovery there is because we think oil prices really have sold off too far, too fast, and we should see some stabilization in the underlying commodity. So our focus is not so much on company internals or fundamentals that are company specific, but more on the commodity price, which we believe overshot the downside. There's a very strong correlation between how a lot of those stocks trade and that underlying spot oil price. So again, similar to the equity market, we think the energy market, specifically oil, they're going to be searching for a bottom in the days ahead, and we think they're going to find it within the next couple of weeks or so.
Hey, Dan, Brian Chung here. So when we were focusing on the sharp sell-off specifically last week, it did seem like based on the NASDAQ and a lot of tech stocks that maybe tech wasn't taking it on the chin like the broader equities market was. I'm wondering how that plays into what you're watching right now as we see more risk aversion with gold surging and also with fixed income continuing to fall when you're looking at yields. What does that say about maybe the attractiveness of tech stocks right now?
Yeah, no, it's a great question. I mean, at the end of the day, at a market bottom, you really have to flush out everybody. There's an old saying, they shoot the troops on the field first, and then they follow with the generals standing behind the lines. And in our current market structure, you have technology, large cap tech, and large and mega caps in the U.S. really being those generals. Everybody was crowding into those groups as sort of a safe haven, and it was allowing the other markets to really sort of struggle for the most part. So I think you're right. We may see more pain in technology. I don't think they're going to completely fall apart, but you could maybe, to get us to the other side of this whole corrective process, you're likely to see more volatility, and they go after, say, the Netflix or the Apple, those things that have sort of been standouts. I don't view them as particularly expensive or ridiculously expensive, I should say, at their current multiples, but they are still elevated. And given all the uncertainty surrounding the ongoing coronavirus epidemic, not to mention election uncertainty. I think you can add that into the mix of sort of, the macro uncertainty. But given those things, I think you could still see some volatility in tech. But again, in the weeks ahead, if we see a big repricing in technology shares, we're mostly likely going to be buyers there.